Good day everyone, I am Tasneem Uyag from section B56. On behalf of Group 4, I will be beginning the presentation of our culminating activity. Together with Syra Gagarin, Hazel Lozano, and Miles Sumalpong, this video contains our answers and solutions on a question about effective interest method at a discount. You noted the following investment in bonds account in your audit of Concepcion Corporation's financial statements as of and for the year ended December 31, 2021. So this investment has 5 years and it has an interest of 10%. On January 2, 2020, the company acquired a 2 million face value bond, including a broker's commission of 20,000 pesos. The effective interest rate of the bond is 12%. So they recorded a 1,855,760 pesos in the debit and did the same on the balance. So in the end of 2020, on December 31, they received interest which comes to 200,000 pesos. This comes from the 2 million face value amount multiplied to the 10% interest above. Therefore, the balance now comes to 1,655,760 pesos. So now in the beginning, at the back half of 2021, we have the total proceeds from the sale of 1 million bonds, which comes to 1,120,000. This decreases the balance per books to 535,760. At the end of 2021, we received more of the annual interest of 10% coming to 100,000. This is because there's only 1 million left in the investment after the sale on July 1. So, you also noted the following information. The bonds mature on December 31, 2024. Concepcion holds the investment in bonds to collect contractual cash and for sale, meaning that this bond investment is measured at fair value through other comprehensive income. Next, the prevailing market interest rates of the bonds are 11% and 9% respectively as of December 31, 2020 and 2021. Now that we have finished reading the problem, let us now move on to the questions. For number 1, the December 31, 2020 carrying amount of the investment on bonds is understated by 282,120 pesos. Let us now move on to how we solved for this answer. Here we see in the solution, we begin by acquiring the PV of 1 of 11% in 4 annual periods. Stopping at 4 decimal points, we get 0.6587. Then we have the PV of ordinary annuity of 1 at 11% from the additional notes earlier stating the market interest rate as of December 31, 2020, multiplied to the same number of years as earlier, and we get the total of 3.1024. So, solving for the understatement, we multiply the present value 0.6587 to the principal and get 1,317,400 pesos as the principal's present value. Then we do the same with 3.1024 to the principal and multiply it with the interest rate of 10%, reaching 620,480 pesos for the present value of the interest. The sum of the fair values or of the present values is the fair value as of December 31, 2020, which is 1,937,880 pesos. We then subtracted to the recorded balance of 1,655,760, coming to 282,120 pesos as the understatement for the end of December 31, 2020. Moving on to number 2. For number 2, we have the gain on sale of the investment in bonds on July 1, 2021 is blank. Before presenting the answer to this question, let us observe the prepared amortization schedule for better understanding. Here we see the amortization schedule prepared for the 5-year life of the bond investment. Beginning at January 2, 2020, we have the carrying amount of 1,855,760 pesos. At the end of 2020, we recorded interest income of 222,691 pesos, which is acquired by multiplying the 2 million face value to the effective interest rate of 12%. Then we have the interest received acquired by multiplying the 2 million face value to the interest rate of 10%, thereby getting 200,000 pesos. So the difference between the interest income and received is the discount amortization, which is added to the carrying amount. We repeat this cycle onto the 4 remaining periods until we reach 2 million pesos. So by the end of 2024, you can see that we have two different values in the discount amortization. In the table above, we see the proper value if we follow the correct formula. And however, that leaves us shy of 2 million pesos. Therefore, we have inverted the formula by deducting the carrying amount of the end of 2023 to 2 million pesos, coming to 35,791 for the discount, thereby ensuring a flat value of 2 million at the end. So let us now move on to the answer of question number 2. Again, the gain on sale of the investment in bonds on July 1, 2021 is 124,421. Let us now see the solution for this answer. To get that answer, we first solve for the amortized cost for 2021. Let's take the amortized cost as of December 31, 2020 according to the amortization schedule earlier, which is 1,878,451. Then subtract half the discount amortization because only half the year has passed, which gives us 12,707 pesos. The sum of both gives us the amortized cost as of July 1, 2021, which is 1,891,158 pesos. So to get the gain on sale of investment, let us take the total proceeds from the problem earlier and solve for the accrued interest during the period, taking the remaining 1 million multiplied by the 10% interest and multiplied to 6 over 12 because that is the current duration from January 1 to July 1. The difference of the total proceeds and the accrued interest gives us the net proceeds of 1,070,000 pesos. Then, with that answer, we subtract to it half the amortized cost, which gives us the total gain on the sale of investment, 124,421.
So for number 3, we were asked to find the interest income to be recognized in 2021. The answer is the interest income to be recognized in 2021 is 169,061 pesos. Now let's solve how did we arrive to that amount. So first, I made this table as a reference para makita na to ang present value on December 31, 2020, which will be used in computing the total interest income in 2021. So, first, the present value on January 1, 2020 was 1,855,760 pesos. So, kanang amount atong multiply sa effective interest rate, which is 12%. So, we will get an amount of 222,691 pesos and 20 centavo. And that would be our interest income. So, atong i-minus ang atong interest received, which is 200,000 from our interest income, and we will get an answer of 22,691 pesos and 20 centavos. So, that would be our amortization for December 31, 2020. So, kana atong amortization, kay atong i-add sa present value on this January 1, 2020, and we will arrive to an amount of 1,878,451 pesos and 20 centavo, and that would be our present value on December 31, 2020. So we will use that amount later to solve the interest income in 2021. So again, that amount atong i-multiply sa effective interest rate, which is 12%. 12%. So we will arrive to the amount of 225,414 pesos and 14 centavo. And then again, we'll subtract the interest received, which is 200,000 from that amount. And then we will arrive to the amortization of 25,414 pesos and 14 centavo. So, ato na sa nang i-add na amount sa present value on December 31, 2020. So, we will arrive to the amount of 1,070,000 903,865 pesos and 34 centavos. So now, let us solve the total interest income in 2021. So first, let us solve the remaining bonds on December 31, 2020. To solve the remaining bonds, we will use the present value on December 31, 2020, and then multiply that by the effective interest rate of 12% and then multiply again by one half. So we will get the amount of 112 pesos, 112,707 pesos. And then let's solve the bonds sold. To solve the bond sold, we will again use the present value on December 31, 2020, which is 1,878,451 pesos and 20 centavos, and then multiply that by one half, and then multiply again by the effective interest rate of 12%, and then multiply again by 6 over 12. So we will get an amount of 56,354 pesos. And then now we will add the remaining bonds and bonds sold. So 112,707 pesos plus 56,354 pesos. And now we will arrive to an amount of 169,061 pesos. So that would be our total interest income in 2021.
As for number 4, the question is what should be the carrying amount of the investment in bonds in December 31, 2021? And the answer is 1,025,330 pesos. To arrive at this answer, we first need to find the PV of the principal and the PV of interest using the PV of 1 and PV of ordinary annuity respectively. So note that we will use the market interest rate of 2021 in computing the PV, which is 9%. And also we only have 3 periods left because we're already done with 2020 and 2021. There's only 2022, 2023, and 2024 left. So the PV of 1 at 9%, 3 periods is equal to 0.7722. And the PV of ordinary annuity at 9%, 3 periods is equal to 2.5313. Then we just need to multiply the PV of 1 to the principal and the PV of ordinary annuity to the interest. So that's 1 million because we already sold the other million to on July 31. So we only have 1 million left worth of investment in bonds. So that's 1 million times 0.7722 will get us 772,200. Then as for the interest, 1 million times the annual interest rate of the investment in bonds, which is 10%, 1 is equal to 100,000 times the PV of ordinary annuity, which is 2.5313. Then will get us 253,130. Then to get the carrying amount for December 31, 2021, we will just add the PV of principal and the PV of interest, which is 772,200 plus 253,130. That amounts to 1,025,330 pesos.
The fifth question asks on the net unrealized gain in accumulated other comprehensive income and equity as of the date December 31, 2021. So the answer for that question is the net unrealized gain in OCI for December 31, 2021 is 73,397 pesos. Now let's solve the process of how we arrive at that answer. In order to get the net unrealized gain value, we must use the fair value for December 2021, in which it was already answered in question number 4. So the fair value, 1,025,330 pesos, will be utilized to subtract the amortized cost for December 2021 and finally get the net unrealized gain. Let's look into the adjusted amortization schedule I prepared to get the value of the missing amortized cost for December 2021. So as you can observe, the amount of the adjusted amortization schedule is equal to the half of the amount of the initial amortization schedule before. The carrying amount for January 2020 is 927,880 pesos. So this amount will be multiplied by 12%, which is the effective interest rate, to get the interest received value of 111,346 pesos for December 2020. The interest received of 111,346 minus the interest income of 100,000 is equal to the discount amortization of 11,346 pesos, in which this value will be added to the amortized cost of January 2020. So 11,346 pesos plus 927,880 pesos is equal to 939,226 pesos amortized cost for December 2020. Same process as before, the December 2020 amortized cost of 939,226 pesos will be also multiplied by 12% effective interest rate to get the interest received of 112,707 pesos for December 2021. The interest received of 112,707 minus the interest income of 100,000 is equal to the discount amortization of 12,707, in which this value will be added to the amortized cost of December 2020. So 12,707 pesos plus 939,226 pesos is equal to 951,933 pesos amortized cost for December 2021. Finally, we got the missing amortized cost value. Now we will subtract the December 2021 amortized cost of 951,933 pesos from the 1,025,330 pesos fair value of December 2021. Thus, we simply got the answer of 73,397 pesos as the net unrealized gain in OCI in equity as of December 2021.
So the standard that governed the problem that we had presented is BFRS 9, which is financial assets.
To wrap up the presentation of Group 4 culminating output, we would like to mention that we utilize the initial and subsequent measurement of debt investment, particularly corporate bonds. We use the effective interest method for discount to solve for the amortization schedule of the bond investment and get the carrying amount after the sale of half of the bonds acquired by Conception Corporation. That is all for Group 4, Section B56 culminating output. Thank you for watching. Have a great day ahead.